Hey everybody, this is John and welcome to the free video. It was an interesting week today, especially interesting because everybody I was talking to is looking for the market to roll over and die. I mean, obviously it's been a very volatile January and we're coming back up and here's resistance, right? So we should roll over and die. And instead we just blew through resistance and got to that 201 level. Well, we were just following along and just kind of like, all right, we got to squeeze. Let's focus on the long side until the squeeze is over. So it actually made it pretty easy. So probably my favorite setup was Netflix. This is one where not only did we have a squeeze in the stock market, but we had a squeeze in Netflix. Okay, and when it fired, we got in here just above the fire line and looking for it to rally higher, and it was fantastic. And this one turned into a nice, at least on the day, a nice $26,000 winner, where we had some call options, the $90 calls, and then, of course, a put credit spread, making most of their money on the calls. And when you get a concentrated directional move like that, you're going to make most of your money on your directional options. But these are nice because, if for some reason the stock would have traded sideways, we still would have made money on that put credit spread. And incidentally, in Priceline, all we focused on was put credit spreads, and ended up in a nice day on that, as we're able to buy those spreads back at a much cheaper price than we originally sold them for. And so the question now is, what now? At this point, I do think that the market rally is ready for a pause, but that there are still stocks out there that can rally. And I don't care if it goes up or down. I'm just looking for focused movement. One thing I'm liking here are the miners, FCX and a couple of other ones. They've been written off for dead. And you can see this came back down to $2.88 after being it wasn't that long ago when this was a $30 stock, right? And so now it's kind of trying to roll over here. You can see there's a lot of volume coming in. There's huge short interest here, and I still think there's some more upside. And that's a fun one simply because it's a lower price stock. And then from there, we've got some interesting movements in gold. I think gold is on the verge of making an extended move higher, okay? But on the other hand, some of the tech stocks that I love to trade, Google, while it looks interesting here because we have a squeeze, we also have, and this is what's happening on a couple of different stocks, combating points of view. So the momentum on the weekly chart is down while the momentum on the weekly chart is up, and that kind of creates sideways movement, okay? And if we want to make the most of these volatile markets, then we don't want to trade stocks or options on stocks that have conflicting time frames. All right, we want to see something where one is essentially giving power to the other one, not taking power from it. And it's not as big of a deal if we're in a quiet uptrending market, but right now we're in a volatile market and you've got to be picky. You've got to be choosy on these stocks. All right. So I'm going to be talking more in depth about this on Tuesday. So I did a webinar this past Tuesday that was kind of in general. Here's some things to talk about in terms of volatility. And now this Tuesday, we're going to get very specific. Okay, so simpleroptions.com/volatile. And these are the things I'm going to talk about. All right, so I am going to be going through why fortunes will change hands in the next 12 months. This is the kind of year where funds and individuals blow up their accounts. And there's actually a lot of money to be made by taking what I call the opposite side of blowups. Why volatility can be massively profitable if you know how to spot hip mints. What I call high probability moments in time. Okay? And a big part of this is just being patient for that. We're going to talk about what that looks like. How newer traders with small accounts can take advantage of volatility. The reason why strategies that worked over the last 5 years will rip your head off in 2016, that's probably the biggest complaint I'm getting from people. It's like, gosh, everything I've been doing is not working. Yes, you have got to adapt. Why the forces behind falling inflation and negative interest rates are the key to understand how to be consistently profitable now. Okay, not people, but institutions are scrambling because of what's coming down the pipeline, and they got to get their ducks in a row, and that moves markets. How to spot major reversals in advance and then use simple option setups to pull in outrageous profits while everyone else freaks out, and how to create a consistent income and build long-term wealth with simple setups I've refined more than 25 years. So again, just trying to give specific examples of how this works. You guys have a fantastic weekend, and we'll see you at the next update.